Blessed, but it's harder to see sometimes. Trying to find my peace of mind. You said, how could you be so blind, babe? You just follow your dreams, you gotta live your life. I'll give you something to believe in. I'ma be the reason. So please stay. Say you won't leave. Real life is for living, but the price you've been given is not cheap. So please stay. We'll share the whole fee. Yeah.
Welcome everybody. Thank you so much for dropping the notes into where you're from. I see Lagos in the house, Uganda, a couple other notes here. One thing just to add on to that, feel free to join the conversation on Twitter, and we'll also be sourcing some questions from there as well. So enough about that. Let's get started. So what's up, everybody? My name is Benjamin from the Nala team, and I'm so excited for today's panel. We've got so much wealth of knowledge in this room and so much experience to share and learn from all the way from West Africa to MFS across multiple markets to Eastern Africa. Shout out to Stone holding it down, but also representing other markets as well. So before we get started, I really appreciate everybody who sent questions in. The first question I would love to know, just for a quick background for everybody, is tell us a little bit about your background, your current role, and one fun fact that people might not know about you already. And the order will go as Rachel, Stone, then Atsu.
Cool. Hi. Thanks for having me. So psyched to be here. So I'm Rachel Balsham. I'm the Deputy CEO and Head of Corporate Development for MFS Africa. We are Africa's largest digital payments platform. If you don't know us, it's probably because we are a B2B platform, and I'll get to say more about what that means and its implications for cross-border payments in a minute. The fun fact that I have to share is that I have featured in a commercial for a Beninois airline that has since been blacklisted by the European Union called Comair. So it was just before the fully digital age. It was like 2009. So there's a very good chance it never made it to YouTube, but it's out there somewhere.
Awesome. Thank you so much, Rachel. Stone, you want to go next?
Hi, can you hear me?
Yeah.
Great. So yeah, my name is Stone Atune, and I work for a company called Eversend, where we're pretty much building a financial services platform for Africa and African diaspora. Fun fact, there's tons of weird stuff. One is I used to write plays, like a full play. And that, yeah, full plays been on radio, which is something people don't when I tell them I worked on radio for almost 5 years. Yeah, cool.
Awesome. Thanks, Stone. Atsu.
Hi guys, my name is Achu Davo. I'm the founder and CEO of BitSeeker. So our app basically helps people move money instantly between African countries. We're primarily focused on Ghana and Nigeria, but we've been able to serve many other African countries like Mali, Cameroon, Senegal, and Ivory Coast. So what makes our app very, very cool, and also differentiates us from many other money transfer apps is the fact that movement of the money in the background is done with the help of Bitcoin at our startup. So that's one thing that makes us cool, in this space. So we're able to build the app and move millions of dollars without the help of big banks, even up to this point. So I dropped out of college in America to come down to build this app. But one cool, I guess was the word, fun fact about myself is, so I'm 26, but I still don't know how to drive, and I have no plans of ever learning how to drive. That's something I've just never been interested in.
Hey, shout out to Uber for the sponsorship.
So that's one fun thing about one weird fact, I guess, about myself.
Nice, awesome. I'm looking to get like an honest and open discussion about from everybody from your perspectives, and hear honestly, like what are some of the challenges with building. So would love to touch in briefly. So I have a bunch of questions that the audience have given us already. I'll go through some of these. Feel free to chime in where you feel strongly about, but we'll have enough questions for everybody here to answer as well. So the first question I have here is, what are the main challenges and opportunities exclusive to Africa for remittance companies?
So I'd like to start, if that's okay. So I think the biggest opportunity for fintechs in Africa is to build on the existing infrastructure that we have here. So I think Africa is very unique in that a lot of layer one technology, right? If you think about like banking system in Nigeria or mobile money in Ghana and M-Pesa in Kenya, has been built very, very, very extensively. Like there's very, very like extensive networks of these layers that have been laid down in the various countries. And for fintechs to better realize their dreams like very quickly, I think it will just serve us best to build on top of these things that already exist. But we might also know that a lot of these infrastructure, like I'm saying, these layer one infrastructure, they've been very much segmented up to this point. Like we have like I said, banking system in Nigeria, we have Momo in Ghana, but those two systems, even though they work very well in their various jurisdictions, there is literally no connection between them. But I think in the past few years, there's a miracle that happened, which is basically the advent of cryptocurrencies. Having Bitcoin being widespread, that was a very big miracle for our space, giving us for the first time an opportunity to connect all the very well-built layer one infrastructure that have been built in all of these markets. So I think the biggest opportunity in Africa is to find out how we can build effectively on top of the systems we already have in these various countries and use crypto to connect the various segmentations. So a very good example of what I'm saying is that, so when we have like apps like Eversend or Bitseeker or Chipper Cash, when you talk to people, even talk to investors, one common question is, oh, so wait, are you competing with mobile money or are you competing with M-Pesa? And I always want to say, are you crazy? Like that's not even possible. That's not what we are doing, and that's not possible. Apps like ours cannot exist without mobile money, cannot exist without M-Pesa, cannot exist without the Nigerian money transfer system. So it's like it's going to do us a lot of good to just understand that fintechs are not here to build new layer ones, but to build on top of what already exists. But I think startups already understand that. It's the big banks that I think are still a little bit behind in grasping that concept. Yeah, but that's what I'd say.
Curious, Rachel, what's your take on this? I mean, you are the aggregator, right? You build all the infrastructure and the pipes for everybody else to build on top. Curious to hear your thoughts on what Atsu's talked about.
Yeah,
and
I know.
Also some of the challenges.
Yeah, I agree completely with what Atsu was saying. I think our model has been, when it comes to cross-border payment, has been exactly that, to leverage the existing infrastructure of the agent networks, which are the most ubiquitous. I think in most markets, they beat out bank and ATM reach by 7x at least in terms of just ubiquity. So it's absolutely meeting the customer where they are, which is one of our core values. And so we also get that question about, are we competing? And I think that it's one thing, and it's a little bit annoying maybe when it comes from investors, but it's a real big problem for everyone when it comes from regulators. And so one of the real challenges is kind of on the one hand, and this is starting to change, kind of a bank-centric perspective from regulators. Okay, we tolerated the mobile money cowboys when they came in and did their thing, but we have to keep it really small. And when mobile money aspires to do things like cross-border, now it's challenged to be like a bank. How do you put a balance of payment form in a USSD menu, right? Another related regulatory challenge is that everybody wants to receive cross-border payments and nobody wants to make them. So it works very nicely for like really strong diaspora markets like Ghana, Nigeria, and Kenya. But to build the future of cross-border payments in Africa, we're trying to really build an any-to-any interoperability, which means we're actually really pushing to build that outbound corridor from Liberia, not just to the sub-region, but Liberia to Zambia, because someone in Zambia might have something great that a Liberian consumer wants to purchase. So one of the challenges is this kind of regulatory fragmentation that's really just focused on looking like a bank, acting like a bank, managing exchange controls by just receiving currency. And then finally, I would say, also in response to Atsu's points, is that a lot of regulators tend to look at innovations and startups as kind of, let's say you come up with an aggregation model. Regulators often struggle to differentiate between what's a competitive space and what's infrastructure. And so they're very eager to kind of coronate a player or a system as the system, rather than permitting their, some multiplicity and redundancy and innovation in a space, whether it's aggregating payments, whether it's merchant services or cross-border payments.
Okay, thanks, Rachel. Stone, you are building on top of multiple aggregators, right? And what's been some of the challenges that you have faced while doing this? Obviously everybody would love to own their own rails, but what are some of the limitations that you've seen created for you? And I remember a tweet I saw from you about 3 to 4 weeks ago. You said something like, at some point, there's always an aggregator that's down. And that affects business to consumer companies, because you lose trust from those consumers because they're moving lots of money through your service. Not just you, but any player that uses that aggregator would have that same issue. Could you open up a little bit more about some of these challenges and what you think is going to happen over the next couple of years, or what you predict should happen in order to fix those?
Yeah, I think I agree that a lot of work has been done in terms of, mobile money platforms and banking systems in some places, like Atsu mentioned in Nigeria, for example, but we still have a long way to go in terms of infrastructure, because things are down a lot, like you mentioned. So what we've done, for example, at Eversend is that in most of the markets where we operate, you find that we have 2-3 partners. And basically, we've built a kind of fail-safe internally where we can flip from one player to another, which obviously brings up massive problems around, float management. So now you need money in 2-3 different places. Yeah, so infrastructure is still a massive problem, especially if you want to expand beyond just, Kenya, Ghana, and Nigeria. Like Rachel mentioned, in some places it's almost impossible to do anything, so we still have a massive problem with infrastructure, and thus expansion is a massive problem. If you do Kenya, Ghana, Nigeria, life is easy. You can get a lot of stuff, a lot of work done. But if at some point you want to do Zambia, Malawi, Senegal, DRC, then it's a whole other issue. The other massive challenge that we see is, again, still around infrastructure. So you can plug in, but management of Forex is a massive problem. So even when some players can help you manage Forex, what you find is the rates don't make sense. So you're competing in the market. People are already offering free services like free no Forex. And then the infrastructure player in the background wants to charge you, 3, 4, 5% to exchange money. But you're already offering customers, 0 or 1.5. Some people offer 0. We refuse to do that. So that's still a massive problem. And this doesn't make sense in our markets, which are really small, and where the average revenue per customer is really tiny. So when you plug in, cost of acquiring these users and the amount of money you make, you find that there's a real problem. And I think when some of this VC money stops, if it ever stops, then maybe we'll come back to reality. Yeah.
Stone, you've been really big publicly on unit economics, and you talk about this. So before we move on to the next person, I'd love for you to talk about what do you mean by this, because you talked about some of the challenges like FX challenges, because that would affect your revenue, right? You talk about aggregator challenges that would affect your revenue. Would love to hear your take on unit economics. How do you look at it with your business, especially when it comes to specifically remittances?
Yeah, so I'll just start from the top and go down. What we are looking at is how easy is it for us to acquire a customer? In terms of the customer has, seen something about Eversend from wherever they saw it. How much is it costing us for that customer to install our app? And then are they converting? If you do the numbers down the road, are they actually registering? Are they verifying? Are they doing KYC? And are they transacting? So that's where it gets really tricky, because you can get 1 million downloads and 20,000 verified customers, and we only allow verified customers to transact. So if you're not careful, you'll find that, yes, you have all these downloads, but when you go down to look at people who are transacting, you find that it's costing you $50 to acquire one person who's going to transact, but you're going to make, $55 off of that person over 3 years. That's not a business. So we try to be super careful. Like, we are no longer interested we're interested in acquiring as many customers as possible, but we don't look at that as a massive measure. Obviously, it helps, with the funnel if you have a lot of people coming in, but we're saying, how do we convert as many people as possible to get down into actually paying customers? We've been lucky, because we still managed to get like our cost of customer acquisition back in less than 2 months, which is amazing for a customer that we're going to keep on average for about 28 months. But we are super strict about this, and we carefully target customers that we think are going to turn into transacting customers.
So I'm really curious about this one, especially with Atsu. Atsu, aka the product guy, aka the Mr. Do a giveaway boss guy. Would love to hear your take on this, because I saw it was your birthday as well. We were giving money out like communion. Drop my Bitsika handle. I don't know if I can make an account yet, but yeah, would love to hear your take on this. And specifically with how it builds the business for cross-border payments.
So I really agree with everything Stone said. He almost said it all. But I think what I'll add is that I've realized that in the beginning, so my company Bitska, we're just about 1 year old, right? And in the very beginning of the company, where no one knows what you're doing, but you put a lot of effort into building your app, it's very imperative to put the word out there of what you're doing. So I think that the whole thing of customer acquisition and even kind of like putting down the cost and doing the unit economics, those things are very, very important in the early days. And what Stone is saying about, what's the ratio of actually active users versus people, like just anyone who downloads the app or signs up, right? But I feel like in the very early days, those things are, inescapable. So for the first few months of your app or your business or, your fintech app, you have no option than to go down that route. And whatever losses you may incur, quote unquote, I see that more as like, yes, the cost of actually building the name or image of whatever product you have. So I strongly believe that it's important to, bear that cost to get to the point where you can organically grow your app can organically grow in of itself. So like for Bitska right now, we used to do ads like last year or maybe in the beginning of this year, but we've gotten to a point where we don't do any ads anywhere, but we get thousands of new users every single week, because we spent our first few months building, investing in customer acquisition channels, ads, online ads, Twitter ads, Facebook, like just stuff like that. Even though it may not have made economic sense in the early days, it's all about gathering a user base to a magnitude where, okay, now there's that network effects or whatever, where they can now generate organic drive of new users to the app.
So by the way, for everybody tuning in who just logged in today, if you're a Bitsika user, just drop your Bitsika tag. Atsu will be sending you some money after this call. Speaking of sending money, Rachel, everybody says remittances is a race to the bottom, right? Pricing is going to decrease over time, and especially as a large aggregator across the continent. What's your take on this? Obviously, some corridors are extremely difficult to do, and hence why being extremely expensive for you. But what do you think? Where does that business evolve over time for you guys as MFS Africa, and specifically when you're supplying remittance-based companies for this? Is there any incentive for you guys to reduce the costs because it reduces your bottom line at the end of the day? How do you guys look at this from your business?
Absolutely. We actually would love to offer cross-border person-to-person services for free. We would love to make the rails free, and if the MNOs want to place a markup, if a really amazing app that has a great customer experience or great loyalty benefit, add-on, value proposition wants to make a markup, we would really like to reduce that cost as much as possible. Because we power transactions over such a large footprint, we're able to make a lot more of the margin on Forex than we would otherwise if we were just concentrating on a couple of corridors. So in terms of charging for the service of the rails itself, we're much more interested in developing additional value-added services on top of those rails than specifically charging for the remittance service. So it's something that we've stated it publicly. Dare has mentioned it in a lot of his public appearances and speeches, that we would love to make person-to-person services completely free. Obviously, you can do that up to a certain amount. Maybe you have a premium after a certain threshold, but with the amount of intra-African migration, and one of my favorite facts to share is that 70% of migration in Africa is within Africa, there's no reason that we shouldn't be able to net out these flows. And in many, many corridors we do. The problem is, like I said, everyone wants to receive remittances in. Not every central bank wants to approve outbound remittances, especially by the large MNOs, which stand to compete with banks much more so than starting new entrant MTO apps. So the more corridors open, the greater our ability to net off, and the greater our ability to reduce the fees and make our margin on the Forex.
Mm-hmm. Stone, thanks, Rachel. Stone, you mentioned that you work with multiple aggregators, right? If somebody here is listening and watching and looking to maybe get into the money transfer business, what are some of the important criteria that you would look into before deciding which type of aggregator to work with for your payouts?
Yeah, we look at, I would say, three main things. One is reliability, because that can be a real problem. And then we also look at pricing. Like you mentioned, this looks like a massive opportunity, but when you think through the numbers properly, you realize that there's not a lot of money to be made on cross-border money transfers. So we try to go for cost a lot. So mostly when we come to an aggregator, we'll say, so if I go to Rachel, I'll probably say stuff like, somebody is offering us this in this market. I mean, and then can you beat that, or can you match that? And sometimes if they can, then that's a good way, a good place for us to go. But they might have some more interesting offering. So for example, another big one that we look at is the ability to exchange money. And this is a massive opportunity because a lot of aggregators don't do this. We're actually building out something internally ourselves, because we've basically built our own platform that plugs into different apps and different banks and different mobile money platforms, sometimes through other aggregators as well. We don't think money is to be made from that, 20 cents per transaction or 0.3% per transaction. The real opportunity is around how do you manage that money, and you need tons of money. So aggregators that can do, where we have $100,000 and we want Kenya shillings and Uganda shillings and Ghana CD, someone who's able to provide that, that's a big thing. So those three things, the ability to exchange money is big, reliability and cost at the end of the day. So ability goes with cost as well. So it must be affordable so that we don't kill our customers with cost.
Atsu, I saw you unmuted as soon as I asked Stone this question. So do you have any thoughts on that as well?
Yeah, I do. So I think, like I said at the very beginning of my introduction, what makes my company, Bitsika, a little different from everyone else is that from the very beginning, we used Bitcoin in the background to do our transfers. So I think what, let's say, Eversend would use, let's say, an aggregator in Nigeria or an aggregator in Ghana for, we decided to do those heavy liftings ourselves using the crypto economies, crypto to fiat economies in the various countries we're in. So we found out a few things. That number one, it just makes everything cheaper. Number two, you have complete autonomy over a lot of things. So for example, when because Bitcoin is measured in US dollars, right? So if you use Bitcoin to do the money transfer, in sense of moving from CDs to Bitcoin to Naira or vice versa, you get to stay as close to the actual exchange rate as much as you can. So by doing that, it puts you in a position to actually give your customers probably like the best prices or some of the best prices they can find in the market. So I think we have taken a little different approach from what Stone has done. And I hope I'm not giving away trade secrets, but I'll say anyone wants to build like, like an app like that, strongly consider using Bitcoin as the way to move your money versus trying to use like aggregators. It's cheaper, it's faster,
Atsu,
you have autonomy.
just on that though, because like, you know, we do have a lot of questions here on cryptocurrency, and that will be a topic we will discuss shortly and briefly here. But why, like, looking across all these markets in Africa, some of them are super anti-crypto. You mentioned the word Bitcoin, it's like you're going to jail at the central bank. Like, this person out, you know, and then you try to explain it, like, don't teach me my job. I've been here for 22 years. You're like, yeah, that's exactly the problem. So
Yeah.
how do you navigate? How do you manage all of this? You know, especially like, cool, maybe Ghana, maybe Nigeria, but what about the Malawis? What about the Zambias? What about the Tanzanias? You know, how do you navigate? What's your take on that, or how do you as a team look at that?
So like it's, I mean, you said it. The thing is that it works better in some economies than some. Some places have friendlier government attitudes towards crypto, and not just that. You need a friendly government attitude towards crypto, or at least like a nonchalant attitude, and you also need like a thriving crypto economy in the countries you are trying to use this strategy in. So it's more about how many countries could we have with these two conditions, and how many permutations could we create between these various countries. That is what it's more about. Because like I always say, it's like whenever you're building something, you have to understand what your role in that process or market is. So our goal is not to come and how do I say, if Malawi has strict rules against crypto, I'm not like a lawyer, like that's not why I'm here, right? So it's that's not my job. My job is not to make sure Malawi becomes friendly towards crypto. That has nothing to do with me. So
Yeah.
I just try to work with exactly the markets that are just viable based on these two conditions that I mentioned. Yeah.
Yeah, Atsu has a good point, which is, we use BTC in Nigeria to move money between Nigeria and even Europe. Sometimes Uganda, but some of these things, like sometimes we're stuck with BTC and there's no way to, liquidate that into some of the currencies where we want to operate. So it works really well, but it's very limited in market scope. So when you get outside, it's very interesting when you're building in Nigeria, Ghana, and Kenya, and maybe I don't know about South Africa. We haven't done any work there. It becomes things are easy, but when you really want to get into some of these other markets, it gets really hectic. If you have BTC and you want Rwanda francs or Tanzanian shillings, I don't know, man. It's crazy.
Stone, sorry to cut you off. Please finish.
Go ahead.
Okay. Sorry, sorry about that, bro. I was gonna add that I see. So like we're talking about, okay, Ghana, Nigeria is easy now, and Malawi and Rwanda and this Tanzania, wherever they are still kind of strict. I just feel like it's a matter of time, right? It's a matter of time before all these markets open up. So it's definitely not an absolute. We can see how the world is going. PayPal, Venmo.
Well, I have a question. I have a question on that, and Rachel, I want to bring you into this one too. So first of all, Atsu, why BTC? Why not like Stellar? Why not Ripple? Or are you also doing that? Or maybe you can't find banks that accept fiat for exchanging for that. And then following up from that, Rachel, curious how you think about Bitcoin and any cryptocurrencies, and how you guys as an organization, because if people aren't using aggregators and are using Bitcoin to trade money, what happens to your business, and how do you guys as a business evolve over time?
Go ahead, Atsu.
The first question being that why Bitcoin and why not anything else? There's a very, very simple answer to that. So I gave two conditions: that we need a friendly government, but we also need like an active crypto economy around that token. So Bitcoin is the most liquid cryptocurrency by far. If you use like some weird coin no one has heard about, you're not gonna get enough people to, to exchange fiat for that currency. So it's a no-brainer. So Bitcoin becomes a no-brainer in the sense that when you say crypto, that's the first thing people think about. And even when we want to get a little bit more technical, like because Bitcoin is, the most popular, most used, like it just makes it more secure, even on a technical level. But I know for a fact that's not what people care about. People care more about like being able to do their exchange, and that has to do with, liquidity, the economics around liquidity of that particular token. So in every single country, Bitcoin has more liquidity than any other cryptocurrency, and that's why Bitcoin and not anything else. And Bitcoin is also awesome, by the way. So,
got it.
Yeah.
Sorry for jumping in ahead. I got excited. So I agree 100% with the spirit that it's a matter of time, because obviously good ideas should just be embraced by everyone who is in a position of authority to execute on those ideas. But that is just not how most regulation has played out in the last 3-4 years, at least. So one of the things that keeps me up at night from an ecosystem perspective is regulatory overreaction to, blips in the system. So people on this event probably remember after the Garissa attacks, the Bank of Kenya shut down every money transfer company with any ties to Somalia, except for Safaricom. Total overreaction, major damage to the ecosystem. And so some of us have been like waiting with our teeth clenched for any kind of overreactions to the Agricor scandal with Silent or the Pegasus breach in Uganda. Regulators love an excuse to say like, actually, we gave you a chance, but this mobile money thing, it's just not safe. So it's something that I think we cannot take for granted, that things are just going to simply move in this direction. And my last point on that would be just around cross-border transactions in the first place, just small value cross-border digital payments. I think we've all seen the millions and millions and millions of dollars of donor funds and foundation funds and nice conferences to poured in about how important cross-border, migrant remittances is. And we still see central banks treating a $20 cross-border transaction the same way, with the same degree of scrutiny and the same risk profile as a $2,000 or $20,000 transaction. So when that is still the norm for most markets, I don't even think about crypto. I'm not even, it doesn't occupy my mind when it comes to where we need to move. That said, as an aggregator that wants to be the rails to enable a multitude of use cases, obviously we are developing some kinds of crypto products and crypto, ways to connect with crypto services. But our fundamental approach is to meet the customer where they are and sometimes meet the stakeholder where they are. So the fact that, for instance, our settlements to our partners and from our partners go over the traditional bank rails gives regulators a ton of comfort. So we power a transaction that's in real time, let's say from Benin to Cote d'Ivoire, but the settlement between, say, MTN Cote d'Ivoire and Move Benin and with MFS Africa is done over the banking system, which is what allows most central banks to say, okay, yeah, fine. So I agree that in the long term, we will probably get there, but I think we can't take for granted that it's just, you know, a matter of them seeing the light in the near term.
Right. So Rachel, I know you talked about earlier this value-added services that you guys as an aggregator are looking to do. What are some of those things that you are looking to build out, especially as you said, the pricing of your main payouts are going to be decreasing over time. So what, as an aggregator, what does that look like?
Yeah, so the most concrete example I can share is that is in the form of merchant services. So we acquired Bionic earlier this year, and we've been integrating our APIs and our corporate structures since then. So we are now able to extend the Bionic merchant payment interface footprint to eventually the 36 and growing countries that we cover. So in terms of making payments to a large footprint of countries, it's a bit of a different value proposition than simply saying, you know, trying to move a value of money as affordably as possible. So we are offering a set of, everyone is saying neobank, but you know, payment services that would rival those of a bank to SMEs that are operating in either a single or multiple African countries. And so offering them you know, multi-currency solutions, collections, payments, notifications, and leveraging the footprint that we've built through the person-to-person money transfer service to enhance the merchant offering.
So Rachel, I did see, I think a couple of months ago, that MFS announced like a job description about building a business to consumer application. Is that going to be run by MFS or is that part of MTN Home? Like, you know, and just curious because as an aggregator, will you guys also be providing business to consumer services or not? And what does that look like? I see Atu sweating, so I'm just want to just make sure that, you know.
So it is no secret that MFS Africa has partnered with MTN Group to create MTN Homeland. It's a new version of a very old product. So in our early days, one of the first things that we had was this very old school white labeled website for MTN. It was, you know, yellow labeled, and it enabled remittance senders in the European diaspora to make, you know, bank card payments to terminate into a mobile wallet. Finally, MTN and MFS Africa have revived the project in the form of an app. And, you know, it was a little bit serendipitous for us to pursue. We're fundamentally a B2B company. We're not interested in competing with our partners. At the same time, there's a lot that we see as you know, kind of interesting possibilities to explore with MTN in terms of pushing the mobile money ecosystem closer to the diaspora. So we use that app, which we own, we develop, we run, as a little bit of a testing and experimentation ground. We work really closely with the MTN, you know, branding people to make it look nice and to leverage their you know, their brand and marketing strength. But I won't say it's our last consumer app. We are, I think a year or so ago, we put out the news that we are Visa's first non-bank principal member of the Visa network in Africa. And so we're one of our, you know, consumer-facing experimentation areas is in the card issuing side, since we have the ability to issue and acquire on behalf of Visa without having a bank in the mix, which is an exciting opportunity. So whether it makes sense for MFS Africa to do that in the form of its own app, or whether it makes sense for us to sponsor bins for other apps or other companies, I think will be a market by market choice, or really remains to be seen. But we do have a little bit of a labs going on internally to work on that kind of space. Also, the Bionic acquisition brought us a lot more closer to B2C know-how. So, for instance, before Bionic and before MTN Homeland, we were totally B2B in our DNA, no interface for anything, just an API. So we're sort of getting a little bit more polished up in the more towards more finicky customers and stakeholders.
How do you strike the balance? You have Atsu over here, you have Stone over here. Stone, like, maybe let me ask you openly, how do you see yourself working with aggregators? And specifically, I want to know, is there a plan for maybe Eversend to eventually build your own rails? And what does that actually look like? Is that the right strategy for a lot of business to consumer companies to go? Because one thing I would be generally concerned about, openly and honestly, is if the aggregator I'm going to work with also has a business to consumer product, isn't there a centralized conflict of interest there for me? And then how do they balance my success out with their success? What's your take, Stone, Atsu, on this?
Yeah, for me, this used to be a problem for me, not anymore now. I realize that there's many ways for us to attract our different customers that we have, and we definitely don't have the capacity to, just to deal with everything by ourselves. So number one, a nice example for is right now we're actively partnering with other fintech players in different markets, like to get some of the work done that we need to do. So, for example, wallets in Nigeria, John helped me out today with a massive problem because he already has something in Nigeria that I don't have, and I can do that for him in Kenya and in Uganda. And it's easy for us to keep our businesses separate. Ideally, I wouldn't want to work with an aggregator that is also competing with me, but I realize now that it's just something that you might have to do. Also, in terms of plans to build our own rails, I think for us from scratch, we built 2 platforms. Very many people don't know is that we have a B2B platform that might connect through MFS, Bionic, and other players, but we do have our own platform whose sole customer is Eversend, that we can very easily open up to other players as well. It's the reason we built it is not because we wanted to do that B2B business from the start, but it's because we had no option. There was just no infrastructure, or where there's infrastructure, it's just not enough. So we are forced to build our own thing. So I guess my take now is it's not ideal to work with an aggregator who's also a competitor, but it's something that you can do given how big and complicated the ecosystem is, because it's really complicated. Sometimes you need help. Like if I want to do something in Tanzania, I might say, hey, you know what, Benja, how do we get this done? Give me Tanzania shillings, I will give you, Uganda shillings, so that we don't have to send money across markets. I asked Atsu for Ghana cedi and he didn't give it to me, but we have to work together.
He's giving giveaways, boss. So I don't know.
You have to drop.
And
so Stone
this
said
is also a bit of
fintech,
this is a truism, and this is the kind of thing that we put on slides, but it's also actually true. We're all competing with cash, and we're all competing with the banks. So I don't think that, I think when it comes to the claims that maybe we have made on others of those slides about being the one whatever to rule them all, maybe in that scenario there would be a conflict, but I think that this ecosystem has room for everyone's innovations. And like the fact that I'm a Revolut user. The fact that TransferWise put out a MasterCard the other day I'm not switching the next day, you know. So there's so many other, I mean, I use them both, but you know, in terms of like which one has my card business, I'm not going to be, you know, I'm not going to switch the next day. So I really feel like we're at this interesting kind of between a smooth skating, not quite a plateau, but a little bit of a rest between inflection points in this ecosystem in which people are innovating on top of infrastructure, but also parts of their innovations include new infrastructure that other people will be building onto.
Yeah. So in terms of building your own rails, or you know, just doing a lot of hard work on the ground, that's something that I've never been very interested in. So I like to just face reality head on, right? So like we were discussing a few minutes back, there are some places where crypto will just be a perfect solution. I embrace that. In places where crypto may not be a good solution, because we don't have direct access or the government isn't friendly, then you can use aggregators, and that's what we've done up to this point. But I just feel like things are going to get better in terms of all problems that, you know, Stone was talking about or Rachel was talking about in terms of building on top of aggregators. Things are just going to get better with time. But I think one thing that we've not acknowledged yet is the fact that crypto is also going to become ubiquitous with time as well, in the sense that, you know, we talk about Bitcoin and we say Bitcoin, people are like, oh, what about the volatility, the price, whatever. But now we have stable coins, and stable coins are also becoming very, very, very popular, right? What if what if people in every African country had an app like Bitsika or Bundle or Eversend or any of these kind of apps that also have a crypto interface? Then you know, you could literally send stable coins to anyone regardless of their location, and then they just get it. And if there are avenues to even spend that crypto, that stable coin in their country, then they wouldn't even need like secondary apps anymore. I feel like we are going to get to a point where this sounds absolutely crazy, but I feel like the concept of remittance itself might sort of become obsolete, because like, but it's like extremely long term though. But I feel like the concept of remittance itself will become obsolete because able to send coins to anyone with no regard to their location. That's what is going to eventually happen in the future. Like the way you can send an email to someone without regard for their location, it's going to become, it's already exists, but again, you know, the economics of liquidity. Yeah, so that's
I agree.
That's what. Yeah, that's
I
what
agree. I agree with Atsu. The only challenge that I have with the thinking. So again, even with our infrastructure play, we're already, you know, playing with USDC and some of these stable coins. They do solve a massive, massive problem. They just don't solve the last problem, which is where you need retro, which is, okay, if retro accepts USDC, or if I receive USDC from Atsu and I'm in DRC, how am I going to turn that into mobile money, into MTN mobile money, into M-Pesa, into something else? You still need to plug into a platform like Retro's. So, for example, Atsu may be able to send me Bitcoin point to point between our two different apps. So Atsu's customer can send maybe Bitcoin to an Eversend customer. But the fact that the step of spending Bitcoin takes such a long time, that customer needs to turn that BTC into Kenya shillings and then cash out. So how are you going to cash out? That's really the challenge right now.
Yeah.
So,
that's definitely a challenge, and that's our reality right now. I think right now you guys would agree we are gravitating very slowly to the point where that whole thing of one app can just send Bitcoin to another app in another country without caring about like the remittance infrastructure. We are very much on that path. You can look at all the remittance apps are adding that Bitcoin angle to their app. So what if the government, what if the Uganda government says, hey, we don't want you to do remittance anymore, but you still have your Bitcoin infrastructure. Ghana says we shouldn't do remittance anymore, but you still have the Bitcoin infrastructure. We'll be able to cheat the system and still do remittance, right? And that's that. So we are going to first move to that point, and far later in the future, we're going to move to a point where crypto can actually be spent. And like I said, Bitcoin has its obvious problems, but it doesn't have to be Bitcoin. Like I see in the future, USDC, BUSD, all these other dollar coins, they're going to have more liquidity in various regions. And now you can just spend them. So if that thing happens, which I think will inevitably happen, then the concept of remittance, like, oh, how do I send money from Ghana to Nigeria? That concept will die because the location of the person is irrelevant when it comes to sending that money. So I think we're going to gravitate step by step towards that. That's a utopia, but I think it's definitely going to happen.
I think that is coming much sooner than I think that is. I see.
I hope
this
so,
new
actually.
year. I think there's going to be tons of platforms that we have in this new year that are going to be able to send crypto and BTC in particular across platforms. Right now we have lots of apps where you can buy and sell, where you can send and receive. But this is already happening, for example, in the US, I think with Robinhood and what's the other app, Cash App.
Yeah,
they are able to send and receive. Our Bitcoin play at Eversend includes send and receive, not just buy and sell. So I think long term, what we are seeing is you have your customers wherever you have your customers, and you can send anybody value wherever they are. The challenge is going to be around how do I pull that value out, because I don't see very many shops accepting BTC from scratch. But we also have very interesting companies that are starting to build out, like the yellow card or yellow something company.
Yellow card, FlickPay.
Flip.
Is it called FlickPay?
FlickPay, yeah.
FlickPay, yeah.
Yeah, but yellow card is super interesting because they are doing agents. So they're actually doing agents. So in that case, you don't need Retro.
Cool. All right. I have two last questions, but we got to keep it quick. One big piece of so much of our work involves how do you manage fraud, right? Because while there's many good people in the world, there's some people who might want to get an extra buck here and there. And has this been something you've experienced? And if so, like, how do you each as an organization deal with it? And then I have one final question, but I would love you to touch like 20 seconds each person on this quick fire, and then we'll go to final question. Rachel, sure.
I was just getting ready. I don't have to be first. Go ahead.
Oh,
go ahead.
Okay.
Yeah, sure. So in terms of fraud, I think there are very obvious steps you can take as a company to battle fraud, but it always comes at the opportunity cost of convenience of your users. So in the very early days of our app, we were like, oh, we don't care about KYC. Like, we just want people to use the app. And we're able to take such risks because we're very, very small in the beginning. But when people start processing millions of dollars to your app, when people start storing, like a lot of money on your app, the reality set in, and like, bro, like, I'm gonna KYC you to death, and I'm also, if you don't have literally your passport uploaded, you can't send a penny on my app. Like so the road to like battling fraud, I think it's actually very like just heavy KYC. And to be honest, your true users, they're always gonna like ride with it. They're gonna do what it takes to use the app, because you don't want a bunch of fraudulent users who look good for your investor reports, but are gonna like drain you. So that's my
Thanks, Atu. Stone.
Yeah, I was just laughing at Atu. I think there's tons of fraud. I think I'm a bit lucky because I'm from the old school. So I'm like one of those guys that we talk about in pitches, like at all these fancy fintech events, and we talk about how banks are old school and slow and messed up. I'm that guy in fintech because I've been in the space for quite a while. So for me, from day one, you're doing, and it leads to slow growth. It leads to, there's obvious disadvantages of thinking like this, because Yes, you will not lose money, but you will grow really slowly. And sometimes if you have some money to spend and you allow people to, you might lose some money, but grow super fast. Right. So it can be helpful, like Atsu said. I think for us, the biggest problem is around cards and chargebacks, because from day one, we are doing, cards on our platform, and that is extremely dangerous. But from day one, we are doing, face match. Is the ID the same as the picture of the person? We're basically doing full KYC on our platform. Even now, it's slower than like a normal, like some of the newer apps, and that's a UX, user experience thing that I feel bad about. But like for every transaction, we're checking sanction lists, politically exposed persons. For every single transaction you're shooting out, we are doing these checks. So it's crazy. But at the end of the day, I think it really helps us, especially if you get in trouble with regulators. So right now we are trying to be more like Atsu, but to kind of ease up a little bit. But fraud is crazy. We've seen, there's other fraud that is not really like fraud of people stealing money, but fraud around, somebody signing up 20 times because you're offering them 20 cents for every sign up.
Rinse, repeat, rinse, repeat. Yeah.
We've even seen, where a group of guys, let's say like 5 guys, go into a village and sign up like 50 women, like 50 women, and these people are never going to transact, but because you're saying I'll give you $1 for every sign up, and they get that $1. I think they probably tell these women, we saw it in Uganda, they tell these women that it's a government program, they're going to send you money.
Oh my gosh.
Then they pull out the $1, they probably give this lady 10 cents or something, and they move. It's all kinds of fraud that we see.
Wow.
And we
crazy.
kind of, we try as much as possible to block this out. When the guy is doing that video selfie in the app, and you see one guy like somewhere in the background, but you saw the guy in another one and in another one, and you're like, what the hell is happening? No. Who are these ladies that know this one guy?
All the same people. They're all relatives. That's high net promoter score right there. Rachel.
Yeah, no, so we, with the exception of MTN Homeland, we don't deal with end users ourselves. So we rely on our licensed partners to do exactly what Stone and Atsu are dealing with, which is not easy. On top of that, we do a few other layers. We do some velocity checks. We have our own sanction screening. We audit our partners, but we rely on the KYC that our partners have done. And then of course we KYC those companies to make sure they're legit businesses, but we generally don't touch the end user. We do worry about ecosystem fraud, like the Pegasus situation and other events I've mentioned, but yeah, it's a big struggle, and I don't envy you guys.
Cool. Well, I have one final question, and this is going to be a tough one. I was asked, so where this question came from is when we were applying to Y Combinator, the last time we applied, they asked this question at the end, and I was super confused, but I had to really think about my business. So, I'm always trying to end on a positive note. This might not be the most positive note, but the question is, if everything didn't go well, what's one thing that would make your business fail?
If everything didn't go well.
Yeah, so like, obviously every company, nobody wants to build a company that's going to fail or something falls apart or whatever, but these are realistic things and challenges in the market or whatever that might happen. But what's one thing, why would maybe each one of your businesses fail today? Like, what's a big risk factor that each one of you are battling or think about sometimes?
Yeah, so we managed to, we have a pretty distributed, we can withstand some shocks. If World Remit decided to stop working with us, we could manage. If MoneyGram just decided to stop working with us, we've got other clients. If Safaricom stopped working with any of our large clients, we could manage. The big thing would be kind of a massive system shock. So let's say there's some kind of attack and mobile money is implicated in the value chain, and so every bank that touches USD or euros gets a mandate that no banks in our value chain, we can't no bank that holds USD or holds euro can have a relationship with mobile money. I mean, that's the most extreme. That's the thing that would just completely shut us down. Other than that, other shocks would really hurt like specific clients or specific corridors. If other competitors do what we do better, then we're smaller, but we're still going to be powering transactions between here and there. But it would really take us a real system shock, and unfortunately, it's not actually impossible to imagine.
Thanks, Rachel. Atsu Stone.
Yeah. So I'll keep mine very short. I think one thing that would definitely paralyze what we're trying to do is if government decide to just be super strict or unaccommodating of us. Like you can't fight a government, and there's a limit to how many loopholes you could create for yourself, especially if they decide to come for you. But I'd say that we've not been necessarily unlucky in that department. When it comes to whether dealing with banks and regulators directly or being able to ride under, so let's say being able to ride under someone like Flutterwave, like they'd be very, very amazing. So I wouldn't say we've been unlucky in that department, but that's something that could really collapse any app like ours. If any government decides to, be unfriendly. Yeah.
Yeah, I would probably agree with Atsu on regulation being one of the things that can kill most of our businesses. The other one that I could add on super quickly, I think, that thing that they say that the market is very big for all of us, that's BS. Yeah, we can collaborate.
Is that true?
We can do things. But what happens is, one thing that very many of us do not realize is we are paying for these customers. There's no customers coming you for free. So if the cost of acquiring customers becomes untenable, then you're going to die. So if and the cost of acquiring customers becomes untenable because Atsu is paying for the same customers, and Chipa is paying for the same customers, and Nala and Stone and everybody. And the more players are paying for these customers, whichever way you look at it, be it ambassadors, be it community events, be it going to churches, be it putting our ad money on Facebook and Google, be it giveaways. The moment it becomes too expensive for us, you're going to close shop if you cannot balance out, your cost of acquiring customers with the lifetime value that you get out of them. It just doesn't make sense. So why continue? That's why we are very strong believers. So for us, Africa is a very interesting market. That's why we're very strong believers in bundling, as opposed to being a super well done P2P money transfer app, where we know that if push comes to shove and Atsu is giving remittances for free, we can give for 0.2% and make money on maybe
another service you provide,
or something else. I think that's how this market looks like, unfortunately, and that's definitely something that could kill us, the cost of acquiring customers.
Well, ladies and gentlemen, thank you so much for tuning in. One big special thank you for all the speakers to take their time out of their day to spend with all of you, and for everybody who'll be watching this on YouTube afterwards. please do support the speakers. So if you're in Uganda or Nigeria, feel free to try out Eversend. Go to the website, check it out. Feel free, if you're in Ghana, Nigeria, check out Bitsika. Drop your handle. Remember, Atsu's doing giveaways, even on YouTube. Just drop it on there. They'll follow up with the giveaways. If you're looking at the remittance space or even at the merchant space, feel free to check out MFS Africa and the work Rachel's doing. All their Twitter handles are on the bottom of the link, so check them out as well. So we really appreciate it. I'm a big believer in people building the continent through software and technology. I always say technology is going to change the world in good and bad ways, but my push is for the good ways more. And yeah, for everybody who's tuned in, thank you so much. Just quick plug for Nala, by the way, for those in the UK, East Africans, feel free to support us as well. We're launching a payment service from the UK to Tanzania, Kenya, and Uganda very, very soon. We're just waiting on regulation and licensing. That's all we're waiting for. Yeah, feel free to support us. We have a wait list going, so feel free to jump in there and add your name, and we'll shoot you a private invite when things are ready. Other than that, everybody have a good evening wherever you're dialing in from Lagos to Nairobi to New York to San Francisco. Take care, everybody. Stone, Rachel, Atsu, cheers.
Cheers.